Hey, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 5th of August, Sensex expiry, Tuesday. Markets have been okay. They have been slightly under pressure, but no major crackdown from what was expected last night with the tweet of Mr. Trump stating that there will be additional penalty and tariffs on India. The markets actually looked like they might open under pressure, and Gift Nifty had reacted negatively at that point in time. It fell down by almost 90 points, but today's opening was absolutely fine, and we are kind of flattish only, so there is no major impact of that particular news. Apart from that, there is RBI policy which is about to come, and the markets are keenly awaiting that, though not much is expected in the policy this time. Hopefully the rates, I don't think the rates are going to get cut. So I think it's going to be status quo on the RBI policy also. So no major triggers except for this tariff thing, which is a big overhang. The corporate results have been okay, mixed bag. Some have been good, like ICICI Bank, etc. have been good, but FMCG still continues to be slightly under pressure. Though levers results were good, the consumer names are also reeling slightly under pressure. We are seeing that the other sectors' performance also, especially IT, has been very, very dull, wherein we are seeing even sometimes flat revenue growth and decrease in profit margins, etc. But all in all, the corporate results have been slightly below expectation, but the markets are refusing to go down. Another thing that is happening is FIs are continuously selling in this market, and in spite of the FIs selling, the market doesn't seem to crack. So it is going down steadily, but it is not cracking, which is good news for us. So I'll take you through all of that and what happened today and how I see the market going into next week. So let's begin today's video. This is the chart for Nifty 3 minutes. As you can see that we opened somewhere over here, which is 24,670, and then we kind of made a bottom today, and we have tried to test that bottom 2-3 times, but nothing much has happened. So we are pretty much in that range. We are kind of similarly to where we opened today, and there's some time still to go. But this is the more important chart. If you see, this is the daily chart for Nifty, and you can see that we have broken down, and we have broken down decisively from 24,800, and this level becomes very, very critical. This is 24,460, let's say 24,500 level, because this we have tested 3 times. First time over here, the day the ceasefire news came, then second time over here, this is the Iran-Israel conflict day, and then pretty much we tried to test it on 1st of August, but we did not break it. So this dotted line that you see over here becomes very, very important. Till the time we are trading above this dotted line, which is at 24,450 odd, we are fine. The moment we break this, the next support is at 23,900, and then 23,200, and eventually the last one is at 21,700 odd, which we made on the tariff day. So these are the key levels on the downside, but as you can see that the markets since 30th of June have been in a downtrend, and now the correction in the market from 25,600 has gone to almost 24,600. So 2,000 point kind of correction 1,000 point kind of correction has already happened. From the top, yes, we are about 1,800 points, which we had made, which is at 26,200. So this correction, unless we make a upper higher trajectory now, we are going to meander over here, and this becomes very, very critical for our support. Now let us look at how the open interest shaped up today. So this is the Nifty open interest. As you can see, we are at 0.68. So there are about 18.9 crore, 91 crore calls versus 12.88 crore puts. So that's a gap of about 6 crores contracts, which is indicating that the market setup is slightly bearish as we speak. Not very bearish, because we have seen levels of 0.5, 0.45 also, but still bearish to an extent till the time this gets covered. 6 crore is not a very huge gap. It can easily get covered, and if it gets covered, we are going to see sharp upward movement. But till that time, for whatever it is worth, it is slightly negative. Let us look at the straddle premium. The straddle premium, they opened at about 211, and from there they slightly shot up when that down move came in the market, but from there they have just gone down, and we are at 177 with 2 days to expiry. So it's a less premium, but that is the new regime. Similar thing happened in the Sensex also. Not much movement. The put side stop losses would have gone in Sensex today, but otherwise the decay was more than enough to compensate for most of the people. Now let us look at where we are in terms of the indices for from the all-time high. So you can see Nifty mid cap is at now crossed the 5% mark. So it had made a 52-week high at 17,000. It's now at 16,000. So it's down 5.7%. Nifty 50 is now down 6.22%. And small cap is down now 8.5%, which is okay, because small cap had almost gone to minus 25% in the April correction. From there it is now only minus 8.5. In fact, it had gone to minus 3. It had recovered everything. It was about to make an all-time high, but then from there the correction set in. So it's also corrected about 5%. Nifty next is down minus 14.29%. FMCG is making a comeback. It had gone to minus 27 odd percent. Then it came back. Then it again went to minus 20%. But I think after the lever results, this is now FMCG as a pack has started to do well. I'll show you some news reports, etc. also, which are indicating the same thing. Alpha is again minus 18.5 and Realty is minus 20. Momentum is minus 22. So momentum, IT, etc. are just not firing. Momentum will only start once we break 26,200. Then momentum stocks, etc. are going to come into the picture. Now, why is all this happening? Is one reason also is, look at the FII sell figure. They have been continuously selling. Now, this is the July number. As you can see, July they sold about 47,666 crores, whereas DIs bought 60,939 crores. So DIs have been able to cushion this fall. But after a gap of 1, 2, 3, 4 months, FII started selling. The last they sold so heavily was from October to February, and we all know what happened. The markets really tanked during that point in time, and from there they have been constant buyers for 4 months. This was the first month they started selling, and our markets actually went down. So I don't think so it's a sheer coincidence. It's the sheer weight of money which takes the markets down, and whenever FIIs and DIs both buy, as we have seen in March, April, May, June, the markets actually start shooting up. This month has not been good again. They have already sold minus 5,932 crores, as you can see, in 2 days. And today also there might be a sell figure. So let's see how things shape up. DIs are still trying. Retail is still trying. So retail and DIs have pumped in about 7,573 crores just in August, which is almost slightly less than $1 billion. So this is the construct of today's market. If you see which sectors did well, and which most of them are in red, but some are in green. For example, autos is 0.45% up, metals is flat, and energy is flat. And the ones that have done badly, VIX has gone down, which is interesting. Pharma is down, FMCG is down, banking is down. So pretty much, plus 1% to minus 1% to plus 0.5% is the range today. All the indices are moving within that range with slight negative bias. Two news that caught the eye. One is NSDL shares likely to list with 17% premium as GMP surges. So NSDL shares, the IPO draw has come out, and I hope some of you have been able to get it. I did not get it, so because I think the retail portion itself was subscribed some 7 times, whereas the total IPO was subscribed, I don't know, some 40-50 times, with 100 times QIB subscription, so it was very difficult to get. Another news that caught my eye was FMCG measures to raise ad spends as urban recovery takes shape. This is very important. Now, what this indicates is that the urban recovery is starting to pick up, okay, which could be a good precursor, and this we are seeing in FMCG stocks also, which kind of seemed bottomed out at some point in time, and we've seen that there has been good movement from the bottom. And this is what happens, when a sector is unloved for a long period of time, then it makes a comeback from there. So that is what I always advocate, that whenever a sector is beaten down, not looked at, that is a good time to look at that sector and invest if you understand that sector. I'm not talking about individual stocks over here, but I'm talking about sectors. So there are a lot of sectors, which fall out of favor. We had seen in 2020 how PSU was out of favor. In 22-23, we had seen how banks were out of favor. They did very well that year. Then pharma was out of favor in 24. It did very well. Now FMCG was out of favor for last 3-4 years. It has started to recover back. Now IT is out of favor. So there are these sectoral churns which keep on happening, and it is good if you are able to identify these, and you have high conviction, then you can take some sectoral bets also. So I for one help people build their mutual fund portfolios. If anyone is interested, they can fill up the Google form which is there in the description, And there are a lot of mutual funds which cater to such sectoral bets as well, and which cater to market cap indices, for example, small, mid, and large cap. So I help people build that portfolio. So if anyone is interested, you can fill up the form. I'll get in touch with you. It's free of cost. So that was that about our local domestic market. Now let us look at the international cues, how they are stacked up. US 30 years is trading at 4.8 and it is flat. US 10 years at 4.2%, which is flat again, which is good. S&P VIX is at 17, which is absolutely fine. Nasdaq continues to make all-time highs. It was up yesterday also 1.87%, so it is just roaring away. S&P again is fine. It's again in green territory. Dollar index is at 99, which is okay. As long as it remains below 100, we are fine. Brent oil has cracked a bit. It is at 68, which is good news for us. USD INR is inching to 88, so our currency is coming under pressure. This is something that we need to note very carefully. 88 was the last low. I think we are almost there. This is not very good news, and I suspect this has got something to do with the announcements that have been made by Mr. Trump over the last few days. See, you can see over here, we already broken the all-time high. So our currency is now weakening. This is not good news for us, and hopefully, this should get. And also, I think the reason also could be dollar index coming back to $100. Had gone to $97 index. Now that is coming back, so that could also be a reason because. Yeah, so this is not very good news for us. This will be okay for IT, but not good overall. So gold is at 34.70 now. Has gold also made an all-time high? I think so. It's it would be very near 34.50. I think was the all-time high for gold. So we are, yeah, I think gold is also there, almost there, nearing an all-time high. So that is basically indicating. So when you see this, gold making all-time high, silver making an new high, Bitcoin almost at an all-time high, stock market as an all-time high. This is basically indicating that there is very little the currency debasement of US dollar is happening. It's very, very clear because all these US dollar denominated assets are just going up. So it basically shows that the currency is losing its value over other things. And it's very, very critical to be invested. It's very, very critical to be invested in assets, be it stocks, be it your real estate, gold, silver, any asset. But it's important to be invested, and that is where assets actually keep on increasing over time, whereas monetary or money or fiat, the currency, that loses its value. So unless you are invested, you will feel the heat. The inflation numbers might not show you, but the segmental inflation is pretty high in every country. So while the official inflation numbers might be 5-6%, the kind of lifestyle that most people lead, especially in urban areas, etc., the inflation rates are much higher because of discretionary spending also. So unless you are invested in assets which are yielding you 10, 12, 15% returns, you are going to fall behind. There is no way that you can beat inflation by investing in fixed income like fixed deposits and so on only. It's not possible. It's part of asset allocation, but it's not sufficient. So you should be well diversified. You should be invested in equities, and that is how you will be able to generate some good returns for yourself. So that's it from me now. It was an okay day. It was a normal, usual day. Markets has been in a range, which is fine. And let us see how this expiry plays out and how this month plays out. More importantly, whether we actually we go down further, test the lows, or we continue in this particular range. My best case would be that we undergo the price correction, the time correction, sorry, for another 1 or 2 quarters. That will be a very good opportunity to make very good solid portfolios for yourself, and the more the time correction, the better it is, because price corrections are often very difficult to navigate. Time corrections are much more easier. So that's it from me now. If you like my video, please do subscribe. Don't forget to subscribe to the channel, because a lot of folks miss out on that. And I shall see you soon with another update. Thanks for watching. Take care. Bye bye.